you know why everyone talks about US Fed rates, even if you live far from the US? Hey everyone, welcome back to the channel. I hope everyone is doing great. Let's start today's video. Before that, one important note. After uploading the video, you may notice scam bots in the comments pretending to offer giveaways, investment tips, or fake support. Please ignore them. I'll never ask for your wallet info or contact you privately for money. Stay safe and always verify before you trust. Today, I'm going to answer a question that confuses a lot of people. Why do investors all over the world keep an eye on things like the US Fed interest rates, inflation data, the S&P 500, and even the mysterious money supply? Stick around, because the reasons might surprise you. Let's start with the Fed. Why the US Fed matters. Do you know why people focus on US Fed rates? Well, the US Federal Reserve, or simply the Fed, controls the most powerful currency in the world, the US dollar. And here's the thing, the US dollar isn't just America's currency. It's the world's reserve currency. Countries, companies, and investors around the world use dollars for trade, investments, and storing value. So when the Fed raises or cuts interest rates, it's not just an American story. It can shake global markets. Higher Fed rates usually make the dollar stronger. That can mean emerging markets might struggle because their debts get more expensive. Commodities like gold or oil might fall because they're priced in dollars. Investors might leave riskier assets for safer US bonds. A single Fed meeting can spark billions in capital flows. But what about inflation numbers like CPI? Next, let's talk about the US Consumer Price Index. CPI tracks how fast prices are rising for everyday goods and services in America. It's basically America's inflation thermometer. Investors watch it like hawks, because high inflation often forces the Fed to keep interest rates high. And you know what happens then? Markets get nervous. So when US CPI comes out higher than expected, stocks might drop, bonds might sell off, and the dollar could surge. The same goes for other key data, like manufacturing index, retail sales, and jobs reports. They all feed into how strong the US economy looks, and what the Fed might do next. Why the S&P 500 matters globally. The S&P 500 as a global barometer. Okay, the S&P 500. Why do investors everywhere care so much about this one US stock index? Because the S&P 500 isn't just American stocks. It's home to the world's biggest multinational giants: Apple, Microsoft, Google, Amazon. These companies earn money from every continent. So if the S&P 500 tanks, it's often a signal that global business confidence is fading. That's why traders in Europe, Asia, and even emerging markets keep one eye glued to the S&P 500 every single day. Wait, what's money supply? Why money supply matters. You might have heard the term money supply. Sounds boring, right? But it's super important. Money supply means how much money is floating around in the economy: cash, deposits, and electronic money. If the Fed pumps a lot of new money into the system, like they did during the pandemic, asset prices often rise. Stocks, real estate, crypto, all benefit from cheap and plentiful money. But if the Fed starts shrinking the money supply, it can slam the brakes on the market rally. Less money means less fuel for asset prices. So why watch all these US indicators? Putting it all together. So, why should investors around the world care about Fed rates, CPI, the S&P 500, and money supply? Because they're all signals for how much money is flowing, how expensive it is to borrow, and how confident the world is about economic growth. And since the US dollar and US markets sit at the center of global finance, these signals ripple across the entire planet. So the next time you see a headline about the Fed raising rates or Trump calling Jeremy Powell too late to cut rates, remember, it's not just about America. It could be about your investments, no matter where you live. If you enjoyed this video, don't forget to like, subscribe, and hit the bell so you won't miss the next episode where we dig deeper into global markets. Thanks for watching, and see you next time.